Welcome to Capital Link's Trending News podcast series. In this podcast series, we have the opportunity to discuss with company management on recent news and announcements they have made. I'm Nicholas Bornaldis, president of Capital Link, and we have today with us Mr. Mats Peter Zacho, the CEO of Navigator Holdings. Our discussion will touch upon the company's Q1 2023 results recently announced, but will mainly focus on Navigator's development, strategy, and the LPG sector outlook. A quick reminder that, the usual disclaimer that these podcasts are provided for informational and educational purposes. They do not constitute investment advice or advice of any kind, and Capital Link has no responsibility for them. And in terms of disclosure, we work with Navigator Gas on investor relations. Navigator Holdings trades on the New York Stock Exchange under the ticker symbol NVGS. It is the owner and operator of the world's largest fleet of handysize liquefied gas carriers and a global leader in the seaborne transportation services of petrochemical gases such as ethylene and ethane, liquefied petroleum gas, and ammonia. And they have a fleet of 56 vessels. Furthermore, and we will be talking about that in a minute, Navigator owns a 50% share through a joint venture in an ethylene export marine terminal at Morgan's Point, Texas, on the Houston Ship Channel in the United States. So the company plays a vital role in the liquefied gas supply chain globally for energy companies, industrial consumers, and commodity traders, providing essentially a floating pipeline between all these parties. So Mats, welcome to our discussion today. As I mentioned, it will focus primarily on strategy, key issues related to fleet development, chartering, and so on, capital allocation, and the LPG sector outlook. Let's start with Q1. The results were announced on May 22nd. They were stronger than in previous quarters. We had revenues of 136 million, adjusted EBITDA of 69, and net income of 19 million. So these results were driven by an improvement of all metrics, such as higher TCE rates and higher fleet utilization. So share with us, what were the market characteristics in Q1, if there are any differences compared to the past, and how is the market developing now?
Thanks a lot, Nicholas, and thanks a lot for the opportunity to talk today. I appreciate that. It was a Q2 that was a quite robust quarter, and we saw that robustness in all of our main segments. As you mentioned before, we do transport petrochemicals, ammonia, and LPG, and we really saw strength in all three areas. We've seen China opening up after COVID. We've seen that the price differences for many of the cargoes or commodity types between the price in the US and the price in Asia, Europe, that spread has been relatively high, allowing for an arbitrage where the commodities are transported long distance out of US and to Asia, Europe. So that has helped. That has given, you could say, sufficient price difference to allow the transportation. We saw our time charter rates reach just over $25,000 per day, and that compares well to the just below $23,000 that we saw in Q1 the year before that. So a full 12% increase in the rates that we have been able to charge for the shipping services. We also saw that the fleet utilization was strong. It was over 96%, which is quite unusual. And it compares, of course, very well to the 89.5% that we saw in Q1 2022. So a much higher utilization of our ships. And of course, that means day sailing where rates are paid for by the customers.
Thank you.
So it's all top line driven by utilization and higher rates. We didn't see any surprises on the cost side. So you could say it's this bottom line progress that feeds all the way down to the bottom line result. If we're turning to Q2, we have guided to the market also that we expect to see a 90% utilization, a little bit lower than Q1, but still very robust in a historical context. and also at a level that allows us to maintain relatively good rates. There's some inertia, so we still see a repricing to higher levels of some of the renewals that we're doing during the quarter. So we continue to see an upward direction in our rates.
Very good. So let's move now to the fleet composition. As I mentioned in the opening remarks, Navigator is the owner and operator of the world's largest fleet of handysize liquefied gas carriers. For the benefit of our listeners who are a broader investor audience, who may not know the sector very well, can you please take us briefly through the differences in vessel sizes and trade routes? We have companies that focus on large gas carriers, you focus on the medium size, and other companies are focusing on smaller sizes. So what are the differences basically in the trade routes amongst them?
Yeah, no, our core fleet, as you mentioned, is in the handysize segment. So they are on average 21,000 cubic meters of cargo capacity. We also have five mid-size gas carriers, and we have 9 smaller gas tankers. So you could say we have some bigger and some smaller compared to the handies, but in essence, you should consider us a handysize gas carrier company. So we are in the middle. The good thing about our vessels is that they're relatively flexible. It means that they can transport both LPG, ammonia, like most of the larger vessel sizes, but we can also carry the petrochemicals like ethylene. And to transport ethylene in liquid form, you need to cool them down colder than most of the other commodities. So that means that our ships are specially built to carry this extra cool petrochemicals cargo, and that a lot of the larger ships cannot do. And that means we have this flexibility that we can move to another segment, so to speak, that if the ammonia market is not as strong, well, then we can transport instead ethylene, for instance, or we can transport LPG. So that flexibility is not seen in the larger vessel size categories. We're trading globally. Most of the cargoes we are carrying out of Houston to Asia and to Europe. But if you take a look at a global map just today, you will see that our 56 gas carriers are pretty much distributing all over the world, in the Pacific, in the Atlantic. So we are a global company.
So if I can ask you, I mean, what I take from what you're saying is that the vessel size you're dealing with, you operate, gives you a lot of flexibility and versatility to move among different cargoes.
Exactly.
And if I can ask you, how much of your business is, let's say, LPG related versus the other gases?
Pretty much, you would see that 20% of our cargoes lifted would be ammonia, and then you would see it's evenly split, the rest 40% between LPG and petrochemicals. So, but it does move up and down over time. For instance, ammonia has been bigger over the last 6-9 months than in the past. So that 20% used to be lower. And I think going forward, we'll probably see more ammonia because, and we'll come back to that perhaps a little bit later, talk about the outlook for the ammonia segment. So it's going to change over time. And of course, we are very pleased that if one of the segments are showing some weakness, we can instead deploy our vessels to the other commodities.
So let's move now to fleet renewal. I think this is a topic throughout the industry, regardless of sectors, that everybody's looking for newer, more eco, fuel-efficient ships.
Yes.
So you have been quite active disposing of older vessels, getting new vessels on board. So you have added, I think, quite a few fuel-efficient vessels through your JV with Greater Bay Gas. So can you take us a little bit through your fleet renewal strategy? I mean, your fleet overall is quite young. You have 9.9 years of average age. Yeah.
We're quite comfortable with that. We have a good mix of younger and older ships. And mind you, it's also good for your return on capital employed that you have this good mix and also some more experienced vessels in your fleet. So we're quite comfortable with the composition that we have right now. What we continue to do, and you'll see that in the shipping sector in general, that you need to renew your fleet over time, and you do that by selling some of the older vessels, and they are typically being sold for regional trade, for coastal trade, often in Asia or the Middle East. And those vessels are no longer useful for us because our customers require that they are relatively modern, the tonnage that they use. So some of them will have age requirements, and some will prefer to have more energy efficient younger vessels. So we need to, of course, make sure that our fleet fits that. So we do that by selling the older one, and then of course also taking delivery of more modern tonnage. And since January 22, we've sold 4 of our older vessels. The latest one was the Orion that we sold just within the past month for just around $21 million, which was a reasonably good price for such an experienced lady. We do have a couple of more ships that are of that vintage that were built in year 2000, but we're not in a big hurry to sell them. The market is still relatively good, and that means that we may be selling one of them this year or maybe 2, but we're not in a big hurry to do so. And we've also acquired some ships, as you mentioned, the joint venture with Greater Bay. We have added 5 efficient, modern second-hand vessels. The last one was taken on in April 23, ahead of the original plan. And we are looking around, seeing if we can mop up or we can attract more accretive second-hand vessel purchases. So we are eager to consolidate the sector further and to acquire good tonnage. Today, the fleet is at 56 vessels, 9.9 years, average size 21,000 cubic meters. So it's a very good composition that we have.
You mentioned about the JV you have with the Greater Bay Gas Company. Can you talk to us a little bit about this JV, what it is all about, the doors that it opens to you in terms of new markets?
Yeah, it's a great JV. We are very pleased with it. We've been working together since right before 2020. The vessels were put into commercial management in our Luna pool, we call it, where we pool our vessels with external vessels at the time back in 2020. And now we have taken the ships into ownership in our joint ownership, which is 60-40. So we own 60% and by and large control the ships. So it has developed over time, as you can hear, and we know the ships really well because we've commercially driven them for more than 3 years, and they are very modern and efficient. So we like it that way. Greater Bay has good connections in China with the shipyards, and we hope that we'll be able to develop this joint venture and potentially over time acquire or build additional tonnage within the joint venture so that we can continue to develop it. So we are actively scouting for new opportunities to do more within the joint venture.
So now that we are on the topic of joint ventures, let me go to the other joint venture that you have. You have a 50-50 JV with Enterprise Product Partners for the ethylene export terminal at Morgan's Point. So I find it fascinating. Tell us a little bit about the complementarity and synergy between the terminal and your maritime transportation business.
Yes, we're quite happy with the joint ventures we have right now, and particularly fond of the Greater Bay joint venture and also the one we have with Enterprise Product Partners for sure. It has also been developed over a number of years. The terminal started exporting ethylene back in 2020, and it's really lived up to its potential. Enterprise is a world-class on-land pipeline operator, so they surely bring a great expertise into pipeline management, and what we bring here is the global shipping capabilities. So we are really entirely complementary in the skills that we bring to the joint venture, and that's of course key in this. The joint venture has offtake contracts covering about 94% of the throughput as it is right now. And that means that the joint venture has direct customer relationship to the largest global ethylene cargo owners. And that's, of course, of big interest and benefit to us, so that we can position our fleet to optimize the supply chain. And that means that we can deliver a seamless and uninterrupted ethylene flow to the benefit of the customers. So it's really a win-win here that we are able to coordinate the transportation in a seamless manner to make sure that the customers see this virtual pipeline of ethylene flowing out of Houston, out of Texas, and on to Europe and Asia uninterrupted. So we think it works really well, both for the joint venture and particularly for the customers.
So as I understand, this particular infrastructure investment ties directly into your maritime business because it enhances and optimizes your maritime transportation.
Absolutely. So we can make sure that there's no waiting time, that the customer can move the ethylene exactly when they need to. Then there are no delays, there's no excess time or wasted time during the offloading, unloading processes. So yeah, it's really an opportunity for us to coordinate it through the entire supply chain to the benefit of the customers.
And Mats, if I'm not mistaken, this is one of a differentiating factor and a competitive advantage compared to other peers who are operating in this business who do not have a similar infrastructure investment.
Yeah, I mean, the terminal is very unique. It is by far the world's largest ethylene export terminal, so you don't really see any other similar setups. So it means that we can have that efficiency and also us being the largest handysize gas tanker owner, that we can make sure that the tonnage is always, the vessels are there when they need to be. So it's a win-win for all parts.
And this ethylene export terminal right now is undergoing an expansion. I also saw that you're considering other infrastructure investments, as you mentioned. So tell us a little bit about the expansion, maybe other ideas that you have in the infrastructure investments.
Yeah, it's a very important and exciting expansion that we're looking at right now. As I mentioned before, we are running at 94% contract coverage, so it's pretty much running at nameplate capacity all the time. And that there is more ethylene in North America to be exported, and therefore we need to make sure that there's an outlet for it. Hence, we are expanding the ethylene export terminal. The construction is underway as we speak. It was announced and started earlier this year, and we will be increasing the existing 1 million tons of capacity to at least 1.55 million tons, so 55% increase, but potentially all the way up to 3 million tons, so potentially a tripling of the current capacity. And that's, of course, a very significant expansion, you could say, of the potential global seaborne ethylene. We are expecting to invest $125 million of our cash in contributions to this investment, and matched again by enterprise, so it will continue to be a 50-50 joint venture. Yeah. So of course this means that there will potentially be a lot more ethylene exported going forward, and we now have a world-class efficient outlet to do that. We plan on funding the investment from our own resources for now. We might decide at a later stage to debt finance part of it, but so far we have started paying it from own resources. And yeah, the long lead items have been ordered already, and the construction is expected to be completed and fully operational by Q4 24. So it's pretty soon. I mean, it's already in a little bit more than a year's time.
So let's talk a little bit about the chartering strategy that you have. I understand that you're using a different strategy for LPG maybe versus ethylene, that might be more spot oriented versus LPG more charter oriented. So take us through the mix of the deployment strategies that you have.
Yeah, so there are different strategies for the different types of cargoes. Ammonia is typically a time charter market. So in most situations, there will be a customer who says, okay, I have a need to transport ammonia for the next 12 months. Can we lease your ship so that Navigator continues to operate the ship in the sense that we will provide the crewing and the maintenance of the vessel and so on. But it's basically the customer who decides where the ship goes and what it loads and so on. So that's a time chart, and that means that we are secured that there will be a monthly payment for 12 months, and we know exactly that it's going to be fully deployed for that period of time. The vessel needs to be cleaned up after having transported ammonia before it moves on and takes other types of cargo. So that's why it's not very suitable, the ammonia market for spot voyages. It's quite the opposite when it comes to ethylene. That is typically a spot voyage market, and that means that it'll be cargo by cargo. There's a customer who has a need to transport, let's say, 10,000 tons of ethylene out of Houston and to Asia, and we will then offer our vessel, and we will arrange adequate pricing for that journey. So that's really the difference between the two. LPG can be both. What we typically like to do is to have a mix of time charter and of spot voyages, so that we can have both some stability in our earnings, but also make sure that when the market is strong, that we are able to take advantage of tightness in the market and get a better rate at spot journeys. And right now we like a mix which is typically 40-60, so 40% time charter and 60% spot over the coming 12 months or so. So we have the best of all worlds. We have pretty low financial risk in our balance sheet. We don't have so much debt, and that allows us to be flexible and take more, you could say, operational risk and seeking out the opportunities in the spot market. And we really think that investors are investing in Navigator to get gas tanker market exposure and not so much financial risk. And that means that we like to lean it that way, low financial risk, but take the opportunities and the good pricing that we can achieve in the spot market at the same time.
So you opened the door to the next question about liquidity, balance sheet strength. I mean, you have a lot of liquidity. You have 190 million of liquidity of cash at the end of March this year. Your net debt to capitalization is down to 37%. So fairly strong balance sheet. What is next in terms of targets for leverage and?
We during the fourth quarter of 2022 and into Q1 of 23, we completed 3 refinancings. And that means that the next maturity or refinancing that we have, that will be in 2025. So that's a very comfortable situation that we don't have any refinancing risk for you could say the next 2 years or so. And that feels good. We have a relatively low debt to capital ratio, and we also have a net debt to EBITDA of just 3.6 times. So we think that's a comfortable position. At the one hand, we are getting the benefit of having inexpensive loan capital on our balance sheet, but only in a reasonable amount that gives us the flexibility I just talked about. Combined with a robust cash position, that gives us also the opportunity to seek out new projects, growth opportunities, and of course also reward shareholders. So I think it gives the flexibility that we like to have, so that we can time our investments at the same time.
So now that moves us to the next topic of capital allocation. The usual destinations for capital allocation is fleet renewal, debt reduction, and then dividends and buybacks. So how do you allocate? What is your overall plan when it comes? I mean, you just announced a new capital return policy. So if you can take us through that.
It was great, and it was a first time for Navigator. In the past, we haven't been returning capital to the shareholders until you could say the end of last year, when we announced and initiated our first $50 million share buyback program. That's program we executed on during the first quarter of the year into the second one, and in May we announced that we had completed the initial $50 million buyback and repurchased 3.8 million shares at an average price of just over $13 per share. So we think that was a good deal for the remaining shareholders, that we bought back shares at an attractive price and hence strengthened their return. But we are of course not going to stop there. We have announced a new $25 million share buyback authorization, and in that same context also a new return of capital policy, which includes a fixed quarterly cash dividend of 5 cents per share, starting with the second quarter 23 results. And that means that we'll be also adding, you could say, a return of capital of at least 25% of our adjusted net income. So whenever our quarterly adjusted EPS is more than 20 cents, we'll be paying additional capital to the shares in form of either dividend or additional share buyback. So here we will of course use our discretion, you could say, to see whether we should be paying dividends or buying back shares, and that depends on how our shares are priced relative to net asset value. So all in all, I think it provides a good stable return to the shareholders, and more upside, you could say, if our results allow it.
Thank you. So let's move now to the last part of our discussion on the outlook of LPG and all the other products we're carrying. So let's start with the LPG sector. If you can take us through the North American natural gas liquids production, the LPG exports, what are the main drivers for demand? Yeah,
LPG is a very versatile commodity. It can be used in both the chemical industry and it can be used in energy. I guess for most of us, we would be using it in the barbecue in the garden, but of course it has many other applications as well. But in developing countries, it's a great substitute for wood and for coal in cooking and heating. So it has a variety of benefits in terms of improving air quality, but also being an efficient energy to use. In the US, the production of LPG has grown quite steadily from about 140 million barrels in 2029 to 180 million barrels right now. So it's grown pretty fast. But at the same time, domestic demand in the US is pretty stable. So the surplus has to be exported. And that means that the export from North America has pretty much doubled in the same period. When we look at the LPG, it's very competitive compared to the price of oil. So we are pretty optimistic that the export of LPG out of North America into the rest of the world is going to continue. And I guess you can see it well reflected also in the rates of the very large gas carriers at the current point in time. I mean, they are pretty robust. So there's a lot of LPG flowing out of North America at this point in time.
So I wanted to ask you, in the new energy landscape that we have right now, with the West trying to distance itself from Russian energy sources, has created a completely different landscape for energy, and the word of energy security now has come to be part of the agenda.
Yeah, sure. LPG plays an important role here also. It's a great energy source, and it supplements LNG, you could say, as in the use of energy. Both LPG and LNG have great demand outlooks as export commodities from the US. So I think we're going to continue to see that trend that particularly Europe, but also other countries are looking to secure their future energy supply. And here the US production, the US energy is very attractively priced, and it's also something that we all dare to rely on for a long period of time. So I think that outlook is very robust, and as new structure that we're seeing now that is here to stay.
Do you see more cargoes going to Europe?
Yeah, I think we'll continue to see a lot of exports out of US into Europe.
So now let's go to ammonia and ethylene, which are other major products.
Yes.
Do you see the outlook there?
Yeah, today ammonia is mainly used for fertilizer. So it grows with the food production and population growth in general. I think the future is going to be quite different for ammonia because ammonia will diversify, or it will become used in other areas as well. Most importantly, it has very high potential to become a future fuel for shipping. It's also a good candidate for low emission energy as a source for power stations, where it can be replacing, for instance, coal. In a number of Asian power companies have expressed interest in using ammonia to lower the emissions from their power production. So that means that the growth prospects for ammonia is very, very significant here, and they will most certainly, a great proportion of the produced volumes will be transported by sea. So we're not talking about, you could say, a low percentage of growth going forward. I mean, we'll see a doubling or tripling of the total seaborne volumes that will be transported when it comes to ammonia. So here, the short, the mid, and the long-term outlook for growth in ammonia transportation is very good. When it comes to ethylene, also here, the outlook is quite robust. Demand for sea transportation is pretty much dependent or determined by the cost spread of ethylene between the US on one hand and Asia, Europe on the other hand. The US production of ethylene is very price competitive because of the input material, being ethane, being produced very, very competitively in the US. So that will continue to be the case. Nobody can really match the production cost in North America. So there's a real good opportunity for a major supply-driven volume growth, where the production and now additional export capacity with the terminal that we are building together with Enterprise, that there will be a lot more ethylene flowing out of North America and replacing other input commodities to the chemical industry in Asia and Europe.
So you are quite optimistic overall on the demand side for the cargoes you're carrying. Let's now move to the supply side, on the fleet side. So the handysize segment has a very modest order book.
Yes.
Can you tell us how you see the order book developing? What is the impact in the overall supply-demand balance? And with the new regulations coming in, the environmental regulations, what impact do you think that will have on the fleet?
Yeah, for sure, there is virtually no order book when it comes to handysize gas carriers or smaller gas tankers. And that's, of course, very important because with the order book today, and also the lead times that we are seeing at the yards that are very busy building LNG ships and building container ships. If you are to order a new vessel today, you may be able to get delivery, let's say, sometime mid-2026. So that means that between now and mid-2026, there's virtually no risk of more supply of handysize gas carriers or smaller gas carriers. It is a little bit different for the larger ship sizes, but again, as I explained in the beginning, that they are mainly built for LPG and to some extent in the smaller, to a smaller extent in the ammonia. So the risk that there will be additional capacity flowing in, particularly for the ethylene, is virtually non-existent. If you add to that about 20% of the handysize smaller gas tankers today are more than 20 years of age, that means that there will be some scrapping happening over the next couple of years. And these older ships that are more than 20 years of age, they're really not suitable for customers in our segment. So there's, to some extent, you could say, a tightening of the supply-demand balance in our shipping segments going to happen between now and 2026. And it will only be exacerbated by the environmental requirements, as you mentioned, because there will be some of the less efficient ships that will be required to use power limitations, that they will have to sail at a lower speed in the coming years that they have been able to in the past, and that of course also takes capacity out of the market.
Thank you. So, Mats, we have come pretty much to the end of our discussion. Is there a question that I have missed that could be important for shareholders to be aware on Navigator and the sector?
Yeah, I mean, we talked about a lot about the market today and the outlook for the next year or so, and that is of course the starting point and the most important point. But I think also taking a slightly longer view at things, it's very, very important for me and for Navigator that our business is sustainable, literally sustainable, and that means that we have taken the ESG work that we're doing and the sustainability work that we do very, very seriously. It's a central part of our corporate strategy because it means that fossil fuel transportation, it may run for several years, not for many years, but it does have an expiry date. And we want to be sure that our corporate strategy ensures that Navigator does not have an expiry date. Our business mix will gradually transition towards low or zero emission cargoes so that we are able to grow and develop even if fossil cargoes will be diminishing over time. So in essence, that means that we will provide the transparency around our emissions. We will be setting targets for bringing it down, and we'll devise the strategy for doing so. And then eventually we will of course deliver on that strategy. So we are preparing for the near future, the mid future, and also the long future. And here I think we are in a quite unique situation within the whole shipping segment that we are actually beneficiaries for seeing this whole energy transition that's going to happen because the growth areas like green, blue, ammonia, and CO2 transportation, they fit very well within the competencies we have. And we also have the vessels that are able to transport some of these commodities. So I think it looks good on all three horizons, and that's of course what our whole ESG work is centered around. And then on top of that, I don't know if you saw that recently, we made the first shipping diversity-linked financing together with ABN AMRO, Nordea, and BNP. And of course, this is not something that's going to make or break our company, but it's something that is important for us, that we also participate in driving other agendas than only the energy transition, but making sure that we have a strong organization, that we have the best talent pool to pick from. And here we think that diversity is an important one to focus on.
Thank you. Well, actually, you're very correct to point all these out, because ESG is comprised of three letters: environment, social, and governance. So a lot of the discussion, because of the decarbonization and so on, tends to be on environment. So it's very good to see exactly that you have very specific initiatives in the other areas as well on the overall ESG concept. So well done.
Yeah, no, we can have a long discussion around that, because it is very important to me and to our company, and we have quite significant efforts in all three letters, both the E, S, and G. And we think the governance one is often overlooked. But as a shipping company, it's super important for us that we have a very, very strong governance framework, so that the investors can feel good that we're good stewards of the company in that context as well.
And with that, I think we have reached the end of our discussion. I would like to thank you very much. We had the privilege to have Mats Peter Zacho, the CEO of Navigator Gas. Thank you, Mats, for being with us and having this very insightful discussion.
Super. Thanks a lot, Nicholas. It was my pleasure.
Thank you.